virtually all financial transactions will take place on a blockchain, then I think Solana is kind of the natural bet on kind of that future outcome. DATs have access to cheaper and safer and therefore better leverage than individual investors or like prop shops in crypto do, because they have access to public market fundraising.
All these wrapped structures like DATs or ETFs don't sit well with the purists. How do you reconcile that? Joseph Onorati is a crypto OG and is the founder of DeFi Development Corp, a US listed digital asset treasury company, or a DAT that invests in Solana.
MicroStrategy doesn't do anything with its treasury assets. They're just sitting there, safe in custody. Our organic balance sheet yield in Q3, annualized was 11.4%.
And what sort of risk management frameworks do you have? For example, Solana went down by another 50% from here. So how would you handle that? Hello, Joseph, and welcome to Unashed.
Hey, Sri. Thanks for having me. Appreciate it. Happy to be here.
Joseph, let me dive in straight. Have you been a long time Sol maxi, or was there a strong conviction more of late when you thought of building out the first Sol DAT?
Yeah. Well, thanks. Yeah. So DFDV, our company, DeFi Development Corp, is the first non-Bitcoin treasury company. So we did our transaction back in April to pivot, I guess, or partially pivot the treasury strategy of a NASDAQ-listed company to focus on Solana Treasury. And we didn't pick Ethereum. We could have picked Ethereum as the first non-Bitcoin listed DAT company in the US. And the reason we didn't, the reason we picked Solana was the personal conviction. So Parker White, who's the COO and Chief Investment Officer at DFDV, and we kind of started this company together, or started down this path together. And both of us had been participating in Solana DeFi since mid-21, and Parker had been running Solana Validators for it was about 2 years back then. And I remember the first time I used Solana, and I said, whoa, this is like a consumer grade crypto here. This is a really smooth experience compared to, coming from Bitcoin and ETH Layer 1 kind of back then. And I thought that that speed will enable financial applications that are impossible to do on other blockchains. And I thought that back then, and kind of stuck with that point of view until this year when we started working on this project.
All right, and and in the crypto space, what has that been? You've been with
that part. Yeah, sure. So I went to work. Well, I guess I got connected with some guys who were involved with CaVirtex, which was the first Bitcoin exchange in Canada.
Mm-hmm.
And I started trading there. So
this was back when?
Yeah, it was mid-13. I think it was August, maybe 2013. It was after there was like a kind of a bull run in crypto in April, I think up to like $40 or something, and then it did collapsed back to, I don't know, 5 or something around there. And then I didn't get in there. I got in a little later. So I got really interested in this exchange. I realized that there were exchanges in the space. There were like these arbitrage trades you could do. You could set up trading bots and stuff. So I was on Mt. Gox. I wrote like my first kind of real coding project was arbitrage system on Mt. Gox. And then I went to work at CaVirtex. And they made me the CEO of that company, and I sold it to Coinsetter, which was a New York-based crypto exchange. Then I left after the transaction with Coinsetter, and I worked on a well, in arbitrage business, it was OTC and arbitrage trading. And then I went to work at Kraken in 2016 after Kraken had acquired CoinSetter and CaVirtex. So they kind of branded the transaction as both because CaVirtex had a strong brand in Canada and they were trying to enter that market. But by then, CoinSetter exclusively, owned CaVirtex. And then I was at Kraken for 8.5 years. And most recently, for the last 2 years of it, I was the chief strategy officer there. And when I joined, I think it was in the 20s. I think there were 23 people at Kraken when I joined, and then when I left, I don't know, there's 2,000 something. So that was a great experience, unbelievable experience there. I'd say, it's not like work experience. I mean, like a life experience. It was just a lot of fun. And then I left Kraken to work on another trading business, which we focused. It was like a high frequency market maker. Turns out I'm only a mediocre market maker. And then I just worked on that for a few months, but it was a good time with my buddies. And then realized with Parker, who I mentioned earlier, what was we were talking about what might happen in the U.S. market after the end of Choke Point 2 with the new administration, because we'd kind of been through this choke point stuff in the U.S. At Kraken, which was painful, I would say. And we said, well, public markets are going to open up to crypto, which looks super obvious now, but it wasn't so obvious back in December or January, or I didn't think it was. And then we thought a number of assets that have been kind of accused of being securities are not going to be securities. And Solana was named in the Coinbase complaint as the SEC Coinbase complaint as a security. We're like, well, it's pretty obvious that Solana is not going to be a security, under a new administration, which enables or is one of the inputs to do like a MicroStrategy on Solana, essentially. And that kind of became digital asset treasuries, but they weren't called DATs back then. So that brings us to current.
Yep. Right. Okay. Now, fascinating journey, and I'm just wondering, all these wrapped structures like DATs or ETFs, so many times don't sit well with purists in the space for very philosophical reasons, as we know. You seem to have the sort of the journey and pedigree of somebody who would be a purist. How do you manage? Is there a conflict in your mind, or how do you reconcile that?
I guess along the way with crypto adoption, there's been a lot of trade-offs where the kind of purists have stepped back, I'd say, in the like the name of adoption. So, for example, I think like when I got into Bitcoin, it wasn't anonymous, but you create a new address and you don't know whose address that is, and there were none of these like analytics tools built on top that would identify who was who and where the transactions were going. And I think we could have made a choice then to say, okay, we want cryptocurrency to be private, and I think we didn't, and it was intentional back then, and I don't know if this is the right choice right now. Zcash popularity now maybe is indicating that the kind of sentiment is moving the other way. But there was this choice made back then, I think, for adoption over privacy. And then with privacy, you probably wouldn't get like institutional adoption. It'd be harder to have exchanges have bank accounts. The exchanges couldn't have scaled and so on, right? It would take a lot longer to facilitate mass crypto adoption. And from my perspective, I think that was probably the right choice because it got us to adoption faster. But I guess my priority in mass adoption of crypto is mass adoption of a sound monetary system. And I think that's really important because I think if we move away from fiat to a sound money, then we ultimately constrain the power of states kind of globally and can align the um, kind of the wishes of the people with the actions of the state under a sound monetary system. And I say that because um, with a fiat system, governments or individuals in government can choose to spend and grow the size and role of government without the taxation behind it to support that activity. Whereas in an alternative system let's say it's like a gold-backed system. In a gold-backed system, it's much harder or a Bitcoin-backed system, it's much harder to spend first and tax later. You're going to have to tax and spend at the same time. And I think that kind of if I do air quotes, the people are much less likely to agree to that. So I think what will happen is if we did get to a sound money system or back to one, then the government grows a lot slower. And I think that's enormously beneficial. And if we look back in history to like the greatest atrocities, like who were the biggest murderers in history? Obviously, states, government actors. Environmental destruction, same thing. And I don't know. I guess I could come up with many other examples. So I think anyway, that's kind of the trade-offs are all kind of worth it because we drive sound money adoption. And so to get back to actually answer your question, are these wrappers like a positive thing or not? This is like a very real answer, I would say. Yeah, I think it's worth it if it drives adoption that results in a sound monetary system and a sound decentralized financial system built on top of that money system. But yeah, I mean, it's a trade-off.
All right. And the name of your DAT is also very intentional, DeFi Development Corporation. And so what's been the thinking of why have you named a DAT with which has DeFi in it? And of course, the structure of DFDV is also very very unique. I understand you run your own validators, and it's not delegated to anyone. And on top, you have a it's tokenized as well, and you're able to generate DeFi yield on the DFDV sol as a collateral. And I think you've got something going with Gauntlet. So you've actually tried to put the whole structure of a DeFi yield bearing asset into the DAT. Okay.
Yeah, exactly. That's definitely what we've tried to do. So, so of course we're a Solana Treasury company. We hold SOL on the balance sheet, but then what do you actually do with that SOL, and how do you outperform just like an individual holding the SOL and staking it, or an individual holding a Coinbase account and earning, through Coinbase's earn program there 4 or 5 or whatever percent it is, with the cost of being a public company. And then with ETFs coming into the market with staking, the DATs have to outperform these other products in order to be, useful. So I guess a couple of points here. One is DFDV has to outperform these other avenues for yield on Solana. So the way we do that is we bring our validators in-house and we delegate to our own validators. So that gets us all of the block rewards that the validator might have earned if we were using a third-party validator. Then we keep that, and it accrues to SOL per share for our investors. And additionally, we can get third-party delegation to the validator, which drives additional SOL-denominated revenue, which again flows through to SOL per share for the investors, which is a key metric for the company. And yes, we have a liquid staking token, DFDV Sol. It's minted or created by Sanctum, which launches LSTs on Solana for various validators. And the validator behind the Sanctum LST DFDV Sol is the DFDV validator. So whenever a third party mints DFDV Sol, which is now one of the largest collateral assets on Solana, then we generate additional revenue denominated in Sol that again flows through to Sol per share for our users or investors. And then, yeah, we can use DFDV Sol as a collateral asset and run various yield generating strategies on it. So one of the yield generating strategies we run is a stake looping strategy where we basically can borrow Sol below the returns from staking it. So then you can kind of lever that up. And the leverage is low risk because it's a Sol on Sol loan, so you can't get liquidated from the price of Sol dropping because DFDV Sol and Sol move together, and some of the lending markets actually peg the price of the LSTs to the Sol price if they were to unstake. So even if there's like a big price movement on the LST itself because maybe liquidity on the LST is lower than the liquidity on straight Sol, then there is no liquidation. Our organic balance sheet yield in Q3, annualized was 11.4%, which I think is the highest yield that any DAT has ever earned on its balance sheet in a quarter ever. And I suspect that the other DATs will figure this stuff out eventually, and I'm concerned that they'll walk up the risk curve, but I expect in general DATs to earn higher yield on their treasury assets because they should be participating in their own ecosystems than ETFs would earn or than you would earn on staking on, say, a centralized venue.
Okay, and how would that compare, like you said, Sol per share? How does that compare to, let's say, MicroStrategy or I think that's so is Ford is still not fully live yet, right? They would be so once. How do you compare? How are you going to differentiate your Sol per share, and how would you also benchmark across with, say, MicroStrategy, or even for Bitminer, for example?
Yeah, that's a good question. So, a number of the DATs, like especially all of the Solana DATs, except for DFDV largely and maybe one of the others, they haven't been public companies for very long, and it takes a while to kind of get one's footing, I'd say, as a public company. Like they have to go through shareholder votes that probably take, I don't know, 45 days. Then the shares have to get registered from the pipe transactions, and then the price action has to kind of happen after that. And they need to get through a quarterly filing to kind of make sure they can do it, I think, before they start doing anything sort of more interesting. And in some of the cases, like we're seeing auditor turnover as well, and a public company has to have an auditor, and the auditor is like a critical component for these businesses. And so, honestly, we haven't seen much from the other Sol DATs yet, but I hope, I hope that they get to where they can deploy their assets on chain and participate in the ecosystem and drive value to the Solana ecosystem. But it's a little bit early, so I just say be patient, give them a couple months, and revisit the question then. Now, MicroStrategy is in a totally different spot, right? They've been running this strategy for years. They know what they're doing. But MicroStrategy doesn't do anything with its treasury assets. They're just sitting there, safe in custody, which for MicroStrategy's model, I think makes a lot of sense. They're the biggest, most well-known name. Maybe they should, focus on being the safest, and they can focus on the preferred stock issuance and other access to traditional capital markets as a way to drive Bitcoin per share. I think in 2024 they grew Bitcoin per share by 72%, which is pretty amazing. And they continue to attempt to lever up via the preferred issuances, which I think is a path that many of the DATs will take. We have a S1 filed for a preferred, um, and will be the first non-Bitcoin DAT to, well, we are the first non-Bitcoin DAT to do that.
Okay. And Joseph, when you say preferred issuance, so essentially, I mean, can you explain that? So the notional addition sol per share delta that you're generating, you want to issue that as a bonus to shareholders as a preferred issuance. Is essentially that's what you're talking
Oh,
about?
no, sorry. Let me talk about preferred stocks. So this is a good thing to talk about for investors thinking about
Mm.
participation in DATs because the structure is critical. So a preferred stock is let me say any company can issue, well, any American company, but presumably any company anywhere can issue preferred stock, and preferred stock can have basically whatever economic or voting rights that your lawyers write into the contract. It's just a financial contract that's made up between the company and the shareholders of the preferred stock. So it's like just a different class of stock.
Okay.
And one of the great things about public companies, U.S. public companies, is they can issue the preferred stock and then they can get that preferred stock listed so the public can trade it. So anybody can trade it. And so what this like structure lets one do is basically issue a financial contract where the company is the kind of other side of it that can have almost anything that your lawyers can come up with that the SEC will kind of approve,
Mm.
and then it can become a publicly traded instrument. So, for example, MicroStrategy has issued a number of these, but one of them is Stretch, STRC, which is their most successful preferred, and it's a variable rate perpetual preferred stock.
Mm.
So they issue it with like a par value of $100, maybe it IPOs at like $80, and then can trade up from there. And that has a variable interest rate, and the interest rate varies such that they target $100 on the stock price. So, for example, the stock goes down, the interest rate goes up, or the dividend rate goes up, and vice versa. So, what this does in effect for MicroStrategy is it lets them borrow with no duration, unlimited duration borrowing
Mm.
via this preferred issuance at around 10% interest. And Saylor says uh, Bitcoin's risk-free rate is 30%. So I think he'll borrow as much as he can at 10% to buy and hold Bitcoin in the long term. Now for DFDV, that's a little bit different. Um, Solana is much more volatile than Bitcoin, but Solana has native yield, and the company DeFi Development Corp participates in the Solana ecosystem to earn additional yield on top of those balance sheet assets. So, or the base return on the balance sheet assets. So, uh, I'm not comfortable enough yet to say what a risk-free rate is on Solana, but
Mm.
uh, DFDV has the capability to earn yield on the balance sheet assets to make payments on these preferreds, and we can collect kind of a net interest margin, and that additionally offers leveraged exposure with way less downside risk than an investor buying like a perpetual swap on Solana or
Mm.
margin trading on a centralized exchange would have, and at a much lower cost of capital than it costs like a regular individual trader to lever up, and much safer because with this preferred you never have to pay it back. It's
Mhm.
perpetual.
Okay. And obviously, scale is vital as a DAT. And you're going to Korea with DFDV. How is
Oh
that
yeah.
out? And is that a separate entity altogether, or how is it going to sort of come together?
Yeah, so we launched this program, we call it DFDV Treasury Accelerator, where we attempt to facilitate the launch of Solana digital asset treasuries in other geographies. And we've press released that we have a deal in progress in Japan, a deal in progress in Korea, and then it's public that we've purchased around a 40% stake in a UK listed public listed company in the UK. No, nothing else on that one, but we made the initial investment. And in the case of Korea and Japan and kind of the model generally, we think there are advantages to Solana public companies in a local market. So there'll be like tax advantages for investing in domestic companies for the domestic investors, and then the local board or executive team can do the marketing kind of on the ground in the geography. So, maybe like the Japanese executives in the Japanese entity can get on Japanese TV to talk about Solana, say, and then there's a big tax advantage to investing in domestic companies in Japan, even relative to investing in crypto directly in Japan. So we think this is a model that can work. It has taken us longer to kind of facilitate these companies getting to market than we hoped it would, but we're continuing to go down that path and are excited about the potential.
And the structure is that these other companies are kind of subsidiary companies of the main DFDV, or
No, they're totally independent. They have their own management team, their own board, and DFDV just invests in these businesses and supports them. So we might do some kind of marketing partnership, and maybe we'll do some kind of asset management partnership to where the yield that we can get on our balance sheet assets is the yield that they can get on their balance sheet assets. But they're totally independent companies that make their own decisions and exist in their local markets. Or that's the idea with the structure.
okay. So one of the major drivers for scale for DATs is obviously being the lead to be part of the MSCI, for example. But now that is a serious question mark itself, right? So is that something which can derail or impact DAT plans as such?
Yeah, okay, so you might know as much about this as I do, but the MSCI, which is like an index provider, is considering excluding digital asset treasuries from the many of the funds that it's involved with. And what this could theoretically result in is many of these investment vehicles that currently include DATs would have to sell off their share of the DATs, which could put downward pressure on the price and overall result in less investment or exposure to crypto assets by the investors who hold these funds. So I think this is a pretty big deal. But for DFDV individually, it's not, because DFDV is too small already to be included in many of these indexes. So now in the future, I think it's a big problem. I think it's a bigger problem for MicroStrategy, for example. And I think there's also, I don't know that they're actually going to be excluded. I think there's a good argument to maintain inclusion. And I think that's a continued dialogue between digital asset treasury companies who are kind of working together to explain their case and say, hey, there's other companies in these baskets that make, you're leaving them in. Why are you excluding the crypto ones when these companies are very similar? So we'll have to see how that actually plays out. And again, I don't think that it has much of an impact currently on DFDV, but I think if we can do our part to kind of support the case for the other DATs, then we should and we will.
And just to elaborate it further to understand, I mean, and the argument is that these are more like DATs are more like funds than companies, and this should be excluded from the MSCI, especially, or not be included in the MSCI, especially if they have exposure of more than 50% to an underlying crypto asset. So, but the DAT companies are arguing that no, there are other companies as well in the TradFi setup which are similarly structured. So why have a sort of differential treatment for us? So can you elaborate on that? Which are the sort of some of these other companies and what's the parallel there?
Honestly, somebody else at DFDV is kind of working on this, and I'm not close enough to it to answer. Or I don't feel comfortable enough to, answer with authority. But when I heard the argument, I was, oh, okay, yeah, that kind of makes sense.
Okay, all right, but that's but is that the main argument line that is being taken, or is there anything else?
Yeah, I think the other arguments would be that all of the DATs have operating businesses, like because you can't like the way the rules around these transactions work is literally every DAT has to have an operating business. So many of them have the legacy business from before the change of control transaction took place. So this might be another argument. And then in, say, DFDV's case, I think there's a good argument that DFDV is a validator business, and that's our core focus. And then it just happens to hold, the balance sheet assets in the asset that's associated with the validator, right? If we were a gold mining business and we had gold on our balance sheet because we were, mining it, would that warrant exclusion from an index? I don't think so.
Right. Okay. No, it's very interesting. All the dimensions that when you start peeling the layers of a DAT, it's not that simple. There are so many dimensions to it. Now that when you talk about DFDV, especially as a sort of having a core business as validator, pretty seems like a very strong argument in terms of being an operating company actually. Okay. All right. So January, mid-Jan is when this decision will be taken. Do you think, especially for strategy, this is going to be a pretty heavy decision that could weigh on down on them if it goes against?
Yeah, I think it's heavy, but I don't think that it's going to kill these companies. It's just going to slow them down, And okay, maybe we get, I don't know, they sell off. It just changed who the investors are. It's not going to end these businesses. It's not fatal, certainly. And yeah, I don't know. Maybe I should be more concerned about it. I'm not very worried about this. And I guess it just depends on how long one's time horizon is. And I've been in the space for a long time, and I guess I'm patient. And I think it's going to be many more years before there's widespread sound monetary system adoption. And that's ultimately the goal. And I've been working toward it for a long time, and I'm not going to quit because, MicroStrategy stock went down or MSCI excluded these companies from indexes. I mean, that seems, this is like a speed bump, I guess, on this very long road.
Right. Yeah, no, absolutely. And what sort of risk management frameworks do you have? For example, if what's the quantum of what's the leverage bandwidth that you guys look at DFDV. How is it modeled for a situation if, for example, Solana went down by because of some you know black swan sort of event? So Solana went down by another 50% from here. So how would you handle that?
Yeah, there's a few components to this. So, first off, kind of background on the team. So the whole team's been in crypto for, multiple cycles. I think everybody on the team has been through multiple cycles. And the way to kind of survive the cycle as a business in the space is just planning. So you have to plan ahead and say, you know what, this is a cyclical business, and there could be an 80% drawdown, and what does that look like? And then we model it. So um, I guess so. First, easy answer is planning, but I want to complicate the answer and say I think the part of the point of a DAT is leverage, and DATs have access to cheaper and safer, and therefore better leverage than individual investors or like prop shops in crypto do, because they have access to public market fundraising. So, for example, DFDV has a convertible debt instrument that we raised a few months ago. We raised $125 million in a convertible debt offering. The interest rate, it's coupon's 5.5%, and it's a 5-year duration. It's unsecured. So the bet is Solana higher than whatever the price was when we did the convert 5 years from now? Well, I guess now 4 years and 9 months or something from now. I think that's an easy answer. Yes. And you can't get the, like, let's say I want to go trade on Hyperliquid. Well, I would like the, 5-year unsecured option, please. Like, that's not a thing. Like, you can't get access to this kind of capital outside of the DATs. And then the preferred instruments, like I mentioned before, like MicroStrategy Stretch, for example, which I think is going to be like I'm calling it the Apex preferreds. Maybe Sailor said that already, I don't remember. But this structure for the preferreds, I think, is going to be very common. Strive issued another one with a ticker SATA, SATA. That's another variable rate perpetual preferred. And these are ways to borrow where these companies never have to pay the money back. They have to pay interest, and the interest rate's variable. But with a preferred, you can just opt to stop paying dividends if you have to. And of course, that's going to destroy the value of the preferred. It'll be really hard to raise again, and there's other outcomes of that, board appointments, and it's cumulative, and you have to pay it back later, and whatever the interest. But the terms on this stuff is like radically more flexible than trading, let me trade 2x leverage on a perpetual swap or whatever. You get variable funding rate that can spike to like 200% annualized in a bull market. You get liquidated on the downside. Okay, so I'm like kind of on a rant maybe, but DATs have to lever up in order to provide value to the investors, and they have to lever up safely. But they're like massively advantaged against regular individuals or even crypto prop shops because of the type of capital to which they have access to. And so it's a combination of the two things. We have to lever up because that's what DATs are going to have to do to compete with each other and to provide value to investors. We have to be like access to leveraged Solana or leveraged Bitcoin, more upside, more downside. And we have to plan. And I think that if we're careful and we know what we're doing, and the team is the right team, then these two things can go together very well, and we can create a financial product that can really benefit investors. Now, I think you specifically asked something like, what if Solana goes down another 50% from here? Yeah, I think that's possible. I don't think it's likely, but it's totally possible. And this is a scenario the team talks about regularly. If that happens, no problem from our side. There's no liquidations. There's no like forced selling of Sol. Um, but now longer term, maybe there are some problems, but we could say, well, are we going to be higher than this price 4.5 years from now, or 4.75 years from now? Easy answer in my opinion. Um, and that's kind of, I don't know, some of the ways we're thinking about the risk.
A lot of this sort of comes back to the core belief in Solana as a technology, and you spoke
Yep.
about it being when you first started using Solana, looked at it as being consumer grade crypto, right?
Yep.
How is that thesis playing out? And what exactly do we mean by consumer grade crypto in today's age when there's a lot of talk about bringing Wall Street on chain, and that's not really talking about consumer grade crypto. It's almost about institutional grade crypto. So is there a distinction you're drawing between the two? And is so in that case, it doesn't depend so much upon who is going to win the battle of bringing Wall Street on chain.
Historically in crypto, retail has kind of front ran institutions. So individual investors were the first to adopt crypto, first to adopt all kinds of new stuff in crypto. I think the institutions are, late, and I also don't think it matters, when they show up. They'll get here eventually, but maybe my time horizon is just longer than everybody else's. Um, and of course they're coming, they're here, whatever. And DFDV is Wall Street on Solana now, right? Like we're a publicly listed company. I'm the institution now. I realized this a few months ago and had a lot of fun saying that. I'm like, oh, it's like this happens. The institutions are here. It's me. Um, so, yeah, I said Solana's consumer grade crypto. I like that saying a lot. And I think the way we kind of think about long-term adoption for Solana is, one, all of the smart contract layer ones are in kind of a technology race with each other. And that technology race, I think, is about decentralization, throughput, and speed, which I guess are kind of related to each other. And as long as these, and Solana's winning, I guess, is kind of my point, or where I'm going to get to on this. So Solana has achieved a level of decentralization now that I think is sufficient in the short term, and it continues to further decentralize. And it's got enough, latency's low enough and throughput's high enough to handle all kind of the current demand for transactions on Solana. And I think that the Solana development community is ultra focused on increasing this, to drive additional performance. And I think in the long run, we need much more additional performance, because I have kind of another view that virtually all value transfer will happen on a blockchain in the future, because I think it will be in the future very easy to kind of like develop on the blockchains. The cost will be low enough, and there's sort of no reason that it shouldn't happen then, right? It's just superior to using like a centralized third party that requires trust or a legal contract and system. When you don't have to do that and you can just use code, then I think that's the way it's going to go. So if you kind of buy into this view that virtually all financial transactions will take place on a blockchain, then I think Solana is kind of the natural bet on kind of that future outcome because Solana's leading already on kind of all of the items that I think would be inputs to that future.
And those items being?
Oh, yeah, the transaction throughput, enough decentralization, um, and then there are kind of a bunch of ancillary metrics. I don't know if they're ancillary, maybe they're really important, but current user base, new wallets created. Basically, if you go look at the DFDV Twitter, we're like Solana bull posting, but the Solana bull posting is all metrics. And uh, Solana's winning on virtually all measures of blockchain adoption, except for TVL, notably. But I think that'll move, in the future, and we're kind of bringing that or helping to facilitate or bring that future about by deploying our balance sheet on chain.
All right. Well, that's sort of fantastic to hear. And I don't know what sort of the approval regulatory framework for DATs is, but or maybe just treat it like a hypothetical question. Will DFDV always be a single asset treasury company, which is Solana, or at some stage would you be looking at actually being a portfolio of digital assets?
Yeah, we'll be single asset. So I think investors want single asset exposure in individual vehicles, and then if investors want exposure to multiple assets, they can just buy another DAT. So kind of how we've imagined it is maybe in the future we could do other assets, but if we did, it would be under other tickers. So DFDV is a Solana DAT, and maybe later we would look at something else, which was part of why we picked the name, because it gives us some flexibility. But we have conviction on Solana and no plan to, do anything else. And again, my thesis is investors want single asset DATs. Now, of course, I know that there will be and are multi-asset DATs, and I think that's fine. But I worked at exchanges for a long time. And, whenever an exchange or a OTC desk or whatever tries to package up, oh, here's your package of DeFi assets or whatever, I think the investors in those just get kind of screwed, right? Like I don't know, I'm sure if you had the right active manager, it would work, but it just seems like additional risk to me, and better to let the investors make their own individual choices.
All right. Okay. And Joseph, what's your projection for Solana's price 1 year down the road?
1 year.
Or let's break it down into 6 months and a year.
Oh, geez. Let's say, I don't know, very conservative. $400 6 months from now, $500 a year from now. However, we do have a long-term view that as more and more transactions move on-chain, and our view that virtually all financial transactions will take place on-chain, and that chain will be Solana, then we have a forecast and a presentation on a $10,000 per sol price.
Okay. And what's sort of the time horizon that you have in that?
Oh, it's much longer. We don't have a time horizon assigned to it. I'd say that's like a 10 years out kind of situation. It's got a lot of building to do to get there.
Okay. All right. Well, that's awesome. And looking forward to Sol reaching the 6 month figure first. And, I'm sure everybody would be thrilled with that kind of number. And like you said, the longer term view is, of course, much bigger, much larger for not just Solana, but all the top end of the innovation that's happening in the entire digital assets space. Lovely having a conversation with you, Joseph. Thanks for being on Alpha and Ash.
Well, thanks. I appreciate it. It was good to be here.